Good morning, good afternoon, good evening. My name is Market Maker 69420, and this is the Saturday Crypto Show. As cryptocurrency markets navigate a period of consolidation amid lingering geopolitical tensions and macroeconomic signals, Bitcoin's resilience around the 70K mark underscores its role as the sector's anchor, while altcoins show mixed signals of potential rotation. This update dives into key metrics as of March 14, 2026, highlighting a market balancing cautious optimism with elevated risks from external factors like oil price surges and policy uncertainties. Looking at liquidity and order book depth, crypto market liquidity remains thin, contributing to amplified price movements even on modest order flows. Market depth for Bitcoin has notably shrunk, with reduced amounts available for trading near current prices, leading to sharper swings on smaller trades. Total open interest across the market sits at 102.53 billion, down 3.2% recently, but this reflects substantial leverage exposure that could exacerbate liquidity crunches during stress events. For major assets like Bitcoin and Ethereum, order book data for aggregators show uneven depth, with bid-ask spreads widening during off hours, particularly on weekends when trading volumes drop 20 to 30% compared to weekdays. This environment favors high-frequency traders, but increases slippage risks for retail participants. When looking at volatility and price swings, volatility in crypto market continues to outpace traditional assets, with Bitcoin experiencing routine 3 to 5% daily swings under normal conditions, roughly 3x the volatility of stock and 5x volatility of gold. Over the past week, Bitcoin saw a high of 71,777 and a low of 65,622, rebounding but facing hesitation below 70,000 amid elevated ATR average true range of around $3,343. Altcoins like Dogecoin and Shiba Inu exhibit even higher volatility, with typical daily moves exceeding 20 to 25%, driven by social sentiment and retail momentum. Recent events, including a 16% intraday drop in Bitcoin tied to liquidation cascades, highlight how thin liquidity amplifies these swings, especially in a macro backdrop of commodity volatility spilling into equities. As of 2 p.m. EDT, Bitcoin trades at approximately 70,553, down 0.53% on the day. When looking at funding rates and perpetual futures, funding rates for perpetual futures are predominantly negative, signaling bearish sentiment where shorts are paying longs to maintain position. For Bitcoin, rates across major exchange range from 0.0033 to 0.0055% on Binance, with similar figures on Bybit 0.0045% and OKX 0.0041%. Ethereum rate stands at 0.0015%. These negative rates suggest traders are positioning defensively, anticipating potential downside, though they could set up for short squeeze if momentum shifts. In altcoins, rates vary more widely, with some like Solana showing slightly positive amid rotation hope, but overall the trend reflects cautious bearish bet rather than aggressive long. When looking at momentum continuation or reversal patterns, current momentum shows signs of a developing base after a sharp washout, with Bitcoin preserving a sideways channel between 60,000 to 70,000. A bearish MACD crossover on the weekly time frame remains in place, and RSI hovers near neutral around 55, indicating improved momentum without overbought signals. However, the broader medium and long-term trend leans down, with Bollinger Bands at 63,793 lower and 72,095 upper, suggesting potential for continuation lower if support breaks. Altcoins are forming higher lows and bullish MACD crossovers not seen in 6 years, hinting at reversal potential if Bitcoin stabilized. Key things to watch: break above 70,978 could confirm upside continuation, while a drop below 68,999 might escalate reversals. When looking at Bitcoin dominance and altcoin behavior, Bitcoin dominance is strengthening, currently around 54 to 58%, as capital flows prioritize Bitcoin as primary entry into crypto before redistributing to altcoins. This dynamic reflects a shift to a more selective market favoring Bitcoin's liquidity and institutional appeal. Altcoins are underperforming short-term, with ETH down 1.7% and Solana down 0.6% against Bitcoin's relative strength, but some like DEXE plus 16% and Tau plus 11% are gaining on utility narratives. Unlocked from tokens like ARB 2.4 billion and SUI pose supply shock, potentially extending consolidation, though historical patterns suggest these often mark bottoms in bull phases. A dip in Bitcoin dominance could trigger alt rallies, but current trend delays the alt season to potentially 2027. When looking at open interest in liquidations, open interest has risen to 102 billion, up 2% in the last 24 hours, but flat to negative funding and cumulative volume delta indicate bearish positioning rather than bullish conviction. Bitcoin open interest stands at 46.52 billion, ETH at 27.62 billion, with alts consolidating after January expansion. Liquidations over the past 24 hours total 110.77 million, down 75%, with Bitcoin at 27.73 million and ETH at 26.21 million, relatively low compared to February's 3 to 4 billion cascades. High open interest creates liquidity risks, especially for longs in alt like Tau, where leverage skews heavily bullish and could trigger cascades on downside breaks. When looking at news, sentiment, and external catalysts, sentiment leads cautious, with the fear and greed index at extreme fear levels 11 to 22, driven by geopolitical risks like Iran tension, spiking oil prices 9.98%, and potential tariffs impacts from the Trump administration. Positive catalysts include ISM manufacturing PMI at 52.4, second straight expansion month, signaling growth, reacceleration, and regulatory wins like the Clarity Act brewing. Adoption is rising, with 30% of Americans owning crypto, up from prior years, bolstered by pro-crypto policy. Alt-specific news like Solana bridges, Polkadot upgrades, and airdrops add utility vibe, but hacks like the Gandhi 230,000 exploit remind of security risk. Overall, macro liquidity expansion, Fed QT ending, support upside, but commodity volatility could drag it if it builds into stock. When looking at technical levels and weekend-specific patterns, Bitcoin is consolidating near 70,000 to 71,000, with key supports at 68,999. Break at this price could target 64,323, and resistance at 70,978 to 73,000, eyeing 75,000 if breached. Weekend patterns amplify volatility due to lower liquidity, often seeing 10 to 20% swings. Recent sell-off to 65,000 over a weekend before rebounding. Super trends indicators are bearish on Bitcoin, with moving average lower, but shorter-term ones are firming. Altcoins correlate tightly, so Bitcoin's stability above 65,000 is crucial for alt exposure. Prediction markets peg odds of Bitcoin hitting 75,000 in March at 56%, reflecting shifting expectations. In summary, the crypto market as of March 14, 2026 exhibits cautious consolidation, with Bitcoin dominating amid thin liquidity and bearish funding. Though positive macro signals and technical bases hint at potential rebound, volatility remains high, with external risk like geopolitics weighing on sentiment, but accumulation trends and alt utility developments could spark rotation if key resistances break. Watch for liquidity improvements to signal broader recovery. That's all I got for you guys today. Don't forget to like, comment, and subscribe if you like the content. And if you would like to support the channel, feel free to buy me a coffee on my Patreon. Thank you. Bye-bye.